the growth picture is very fragile.
I think the Fed is being aided and abetted by the global situation in a way.
The Fed's hands are tied here. They do have to hike in order to tackle inflation.
The Fed has largely abandoned monetary orthodoxy.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, March 17th. Our top stories today. The Fed raises interest rates and signals there may be 6 more increases this year. Chair Jerome Powell assures Americans that the fight against inflation won't send the country into a recession. The Bank of England is set to reach another milestone today. It's expected to take interest rates back to their pre-pandemic level. And the U.S. pledges to send more weapons to Ukraine, including dive-bombing drones. In Moscow, Vladimir Putin vows to get rid of what he calls scum and traitors working secretly for the U.S. and its allies. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London. Matt Miller and Kailey Leinz, of course, with me in New York. And Kailey, it seems from a market perspective, stocks clinging to that view expressed by Jerome Powell that the U.S. economy will be strong enough to take it in terms of interest rate hikes, even if bond markets have more reservations.
Yeah, it's interesting to see what message the bond market relative to the stock market is signaling. Is the bond market signaling that the Fed isn't actually going to be able to be as aggressive as it wants to be, and therefore that's a good thing for risk assets? Either way, we saw U.S. stocks rising after that Fed decision yesterday, but we should note that they were already positive going into it because of the risk sentiment boost we saw in Asia with China's verbal intervention on Wednesday, pledging to support financial markets and the economy, boosting stocks in that region. And that was true today as well. We are still feeling the benefit of that. The MSCI Asia Pacific Index up 3.6% after a near 4% move to the upside yesterday. And the Hang Seng China Enterprises Index, the Hang Seng Tech Index, both which saw big rallies in the Wednesday session, were each up about 7.5% overnight as well. Outside of equities, though, in foreign exchange, I did want to point out the massive outperformance of the South Korean won. Far and away the biggest gainer against the dollar among the Asian currencies, stronger by 1.7%, the best day since March 2020 right now at that 1214 level. It's benefiting from some clarity, not as much uncertainty around the path of the Federal Reserve, Matt.
All right, very interesting currency moves, to say the least. We do have kind of an undecided look in terms of the S&P open this morning. Futures not doing a heck of a lot of anything, and investors are buying bonds, pushing the yield down, but not by much, still at 213.32. Crude is actually up again, although it's still down 8-9% for the week, so at 98.54. Texas Intermediate still under $100, and Bitcoin is off 1%, but still at 40,831, so still holding over that 40,000 level. I would say, Anna, that there's a lot riding today on what we get out of the Ukraine war situation, what traders decide they're going to make of the Fed on the second day after, and what comes really out of China, what kind of support we really sort of expect from those markets, because a lot of these question marks are still hovering over this market.
Yeah, absolutely. We saw in yesterday's session, didn't we, Matt, the way the big turnaround in sentiment in the Asia session, because of what we'd heard, that verbal intervention from China, that did filter through into other global markets to some extent. And Europe has benefited a little bit, perhaps, from that. Also factoring in maybe a little more of that Powell view that the U.S. economy strong enough to take the rate hikes. Maybe not. That's debatable. But this is what we've got for you on European equity markets. We do have green, whatever the reason, across the European space. Not by much, though, just up by 0.2% on the CAC 40 and on the FTSE 100. The German market a little flatter. So we could easily be sunk, perhaps, if U.S. futures take a move to the downside. Not much conviction, it seems, in where we're trading right now. We are seeing a bit of movement to the upside in the pound. I just put this one in here, the pound against the U.S. dollar, of course, because it's Bank of England day. Will we see the Bank of England delivering another third back-to-back rate hike? That would take us to pre-pandemic levels in terms of the interest rate here in the United Kingdom. And will it be a hawkish hike, as we saw from the Fed, or will it be a bit more dovish? Will it emphasize the uncertainty that lies ahead with war in Europe? The nickel price has reopened now, but then limit down by 8%. They expanded the limit down band, so it's not 5%, it's 8% now. But nickel sank to that when, after a few false starts, we did actually manage to get the nickel market trading this morning, but looks fairly static, as you can see there. ThyssenKrupp is down by 9.8% this morning. This is an industrial business based in Germany. They are citing war in Ukraine as a reason why they might not be able to spin off their steel unit on time. time. And Ocado, a grocery retailing business here. I just put this in because we need to not forget, not overlook perhaps some of the return to office trays. And this is the opposite of that. This is Ocado, a grocery delivery business. And they talked about the size of their average basket falling because of that return to office trend, Kailey.
All right, so some interesting micro stories to watch today, Anna. There's also a lot on the macro scale that we have to pay attention to in the day ahead. ECB President Christine Lagarde will be speaking at a conference in Frankfurt at 5:30 a.m. New York time, so just about 25 minutes from now. We'll also hear Turkey's central bank. It will be reporting its rate decision at 7 a.m. New York time. Then we'll get the Bank of England rate decision at 8 a.m. New York time. So it's been a busy 24 hours, or it will be, for central banks. And then finally, on the geopolitics front, NATO chief Jens Stoltenberg will be meeting with German Chancellor Olaf Scholz in Berlin, Matt.
All right, definitely watching the reaction out of Berlin to Zelensky's speech as well. While Russia and Ukraine continued talks on Wednesday, reports of shelling kept coming in overnight. Ukraine's calls for a no-fly zone over the country haven't been met out of fear of an escalation. In an address to the German Bundestag today, the president of the Ukraine said Russia is using Germany and others to finance the war. Let's get the latest with our reporters from Medyka in Poland, from Brussels, and from Washington. We'll kick it off with Bloomberg's Aggie Cantrell, who is on the Polish-Ukrainian border. Aggie, how have we seen the conflict, the war, progress over the past 24 hours?
Hi, Matt. So, yes, we've seen more and more reports of shelling and bombing on civilian areas. We've seen reports of this happening in residential buildings in and around Kiev. Vitaly Klitschko, the mayor of Kiev, pointing to this and saying that this is a difficult and dangerous situation for the city. And also in the besieged city of Mariupol in the south of the country, the port city, there has been a report of a theater that has been shelled, that was being used as a shelter for hundreds of people. And there's also a massive effort on the part of the officials in Mariupol to get civilians out of the city and into a safer territory in Zaporizhia, further north out of the city.
Aggie, thank you very much. Bloomberg's Aggie Cantrell reporting from the Poland-Ukraine border. Now to Brussels. Our European correspondent Maria Tadeo is there at the NATO headquarters. We'll hear more in a moment about what it is that the US has pledged to give to Ukrainian fighters. What's the NATO perspective this morning then, Maria?
Well, Anna, we continue here for day two. There's a lot of, as you know, debate around this idea of a diplomatic way forward that involves neutrality. The issue here, of course, Anna, is that it means everything and anything. Yesterday, we heard the Russians are now pushing for a 15-point plan that would mean Ukraine does not join NATO. This is where we are today, and would instead agree to climb down its number of military operations and make it clear that it will never join a Western military alliance. When you speak, however, to Ukrainians, they tell you a very different story. They talk about an international security deal that would be approved not just by Russia. Remember, they don't trust the Russians. They don't trust Vladimir Putin, but they talk about a United States approved plan. They also talk about the European Union, also possibly Turkey joining here. But of course, what we need to remember is that this is the diplomatic way forward potentially. But on the ground, the situation looks very different. As Aggie mentioned, that horrible shelling yesterday in Mariupol, in a hospital where there were kids there, the Ukrainian government saying this is yet another Russian atrocity.
Yeah, the human toll of this tragedy continues to unfold. Maria Tadeo at NATO headquarters in Brussels, thank you so much. And coming up in just a few minutes, Maria will be speaking to John Kirby, the assistant to the Secretary of Defense for Public Affairs and the Pentagon press secretary. So stick with us for that. Meanwhile, President Biden has branded Russia's Vladimir Putin a war criminal and offered $800 million worth of new weaponry to Ukraine, including 100 armed drones. He spoke yesterday.
As well as the ammunition, artillery, and mortar rounds to go with small arms, 20 million rounds in total, 20 million rounds. And this will include drones, which demonstrates our commitment to sending our most cutting-edge systems to Ukraine for its defense.
Jack Fitzpatrick, Bloomberg government reporter, joins us now in Washington. So, Jack, Ukraine is getting drones, it's getting other weapons. What it isn't getting at this point is the jets it's asked for. Will we see movement on that?
As of now, no. It seems that the response is significant from the U.S., but much more lightweight than what President Zelensky asked for. He made his push for a no-fly zone and for actual fighter jets. What you heard the president get into was more ammunition, helmets and body armor for 25,000 people, 100 drones that can be used a little bit more short range rather than surveillance drones or anything along those lines, grenade launchers, javelins, that kind of thing. More things that would be handheld that U.S. officials feel are, they say, a little more valuable in their view to Ukraine. So it's not quite everything that President Zelensky asked for, but lawmakers on Capitol Hill knew that he would, in the words of Chris Murphy, probably ask for the moon. And the U.S. Clearly has bipartisan support for providing military support, but they have drawn a line at much more lightweight, handheld kind of measures that they're providing to Ukraine.
All right, Jack, thanks very much. Jack Fitzpatrick, our government reporter in Washington. Now, the Fed is ramping up an inflation fight in an economy that Chair Jerome Powell believes is tough enough to cope. Policymakers raised interest rates a quarter point, and Powell signaled there will be 6 more increases this year.
Every meeting is a live meeting. If we do conclude that it would be appropriate to move more quickly to remove accommodation, then we'll do so. We do feel the economy is very strong and well positioned to withstand tighter monetary policy. The probability of a recession within the next year is not particularly elevated.
It's not just the Fed in focus. The Bank of England is also out with the rate decision today. Bloomberg's Danny Berger joins us from our London studio along with Lizzie Burden at the BOE. Danny, let's start with you. What are the key takeaways from yesterday's Fed decision?
Well, Matt, the 25 basis point hike, that's not what was surprising about yesterday's decision. We expected that. Rather, it was the dot plot and the sharp cycle that the Fed is forecasting that was more surprising. They see rates around 2% to end this year, 2.8% next year. That would take us through the neutral rate, the rate at which you start to affect growth. And this is what Tom Porcelli over at RBC points out, that inflation over growth at any cost, it would seem. That's the message from the Fed, thinking that they can plow through the long-term forecast without affecting the labor market. Porcelli is skeptical that that's the case. Guggenheim Scott Minerd saying they are in an inflation panic. Now, I realize I chose 2 quotes here which are more skeptical, but they do reflect the reaction we've seen in the bond market. The 5s, 10s inverting, 5s yielding more than the 10. Of course, this is the signal, the fear that there will be a recession, and perhaps an inversion in the belly of the curve isn't as alarming of one in the 2s, 10s, but that is flattening too. We're below 20 basis points for the spread. We are just at 20 basis points. We've taken out that low yesterday in the immediate aftermath of the Fed. So the bond market's reaction is really clear. The stock market has been a bit of a head scratcher. A lot has been made of the divergence. As we saw stocks rally into the close yesterday around Powell's conference, a couple theories here. One might be the bond market saying, okay, Powell, Fed, and crew, you can't go through with what you want, so that could be good for stocks. But also remember, it was largely a positive day, positive news from China and elsewhere, so perhaps the market was also just waiting for the Fed to be out of the way to commit to a rally, Anna.
Yeah, and perhaps that is yesterday's move, and we'll see whether it comes back, Danny, but we're certainly seeing stocks fading just a little this morning, to your point. Stocks in Europe just up 0.1%, US futures now fading to the downside. Thanks to Bloomberg's Danny Berger with the aftermath of the Fed decision. Let's look ahead to another central bank. Our economics reporter Lizzie Burden is outside the Bank of England for us ahead of that decision today. Lizzie, the Fed raised rates for the first time since the pandemic yesterday, signalling 6 more hikes this year. The Bank of England, of course, has already hiked a couple of times. Will the BOE deliver a third today?
Well, it's a tricky moment for the Bank of England, Anna, because while inflation in the UK is running at a 30-year high and it's only set to climb as the war in Ukraine drives up food and energy prices, the risk for the bank of tightening too aggressively now is that it adds to the weight of war on the recovery. So, yes, traders are expecting the 3rd straight rate rise from the bank today, but the question is, how big will it be? There may be some on the Monetary Policy Committee who want to go for a 50 basis point hike to get in control of inflation expectations now, but there may be others on the committee who say that inflation may tame itself by weighing on demand, and there's not much that a rate rise now can do about the immediate crisis. So Bloomberg Economics reckons we'll land in the middle at 25 basis points, which would take the key rate to 0.75%, back where we started before the pandemic.
All right, just under 3 hours to go until that decision. Thank you so much to Bloomberg's Lizzie Burden outside the BOE. Now let's get back to Bloomberg's Maria Tadeo in Brussels, who is joined by John Kirby, Assistant to the Secretary of Defense for Public Affairs and Pentagon Press Secretary. Maria.
Yeah, and I'm very happy to be joined, of course, by Mr. Kirby here, who's been leading and also joining this U.S. delegation here at NATO for 2 days. First of all, I want to ask you, yesterday we heard from President Zelensky almost just ask for help, where he said the situation is dramatic on the ground in Ukraine, and the United States has to lead this. We know that you're deploying big weapons into the country. Can you debrief what's going into Ukraine?
We have been very, very focused on trying to get Ukraine the kinds of material, weapons, and systems that we know that they are using quite effectively in the field to defend themselves. So we've talked about Stinger missiles. We've talked about Javelin anti-tank missiles. We're also working with allies and partners to see what other capabilities and systems they might have that the Ukrainians could use, for instance, in the area of air defense. And so we're having these active conversations right now. We're also helping to coordinate the delivery of nations' material to Ukraine, not just ours, but others as well.
And, sir, we see the Ukrainians are fighting like hell. It's been 3 weeks. I mean, they really fight for almost an existential question of their country. How do you see the state of this army?
They are fighting very bravely, very valiantly, and what we would say is also creatively. They're using their superior knowledge of the terrain and their own geography, as well as their nimble behavior in terms of using these systems they're getting quite effectively. And they have essentially stalled the Russian advance. Now, again, we're going to contribute, the United States, contribute to that effort by them. You saw President Biden announce another $800 million. That brings to $2 billion in just the last year that the United States has given in security assistance to Ukraine, because we know that they are good at using these systems in the field.
And President Putin, of course, yesterday gave out a speech. The content of that speech was quite something, where he talked about Russia will prevail here and we are going to meet our goals. How concerned are you about the response from Russia?
What we have not seen, the Russians, for all the talk about wanting to find a diplomatic path forward, we haven't seen them act on that.
You don't believe that?
There's ceasefire talks going on, and of course we support that, and we want to see a negotiated settlement. That's the way forward here. But what you're seeing by the Russians on the ground is a full-on commitment to military operations. They continue to hammer cities like Kharkiv, Chernihiv, Mariupol, Kyiv with long-range fires. That's a fancy Pentagon word for bombardment by missiles and rocket systems. And they just, you've seen it for yourself, how much damage and death and destruction they're causing. So while at one time they say they want to find a negotiated settlement, they are militarily continuing to try to press for advantage and causing an amazing amount of death and destruction in the wake.
We haven't seen any change over the past 48 hours.
No, the fighting continues. I mean, again, you guys with cameras on the ground can see that for yourself. The fighting continues, the death and destruction continues. And what we would say is that one of the options Mr. Putin still has available to him, and he's got lots of military options, but he also has the option of a peaceful negotiated settlement. And we would like to see those efforts really bear fruit in some sort of earnest way.
And the United States has made that very clear a number of times. But I wonder, you're here and you were telling me off camera you're going to Bulgaria, you're going to Slovakia.
That's right.
Why are you doing this? What's your message you're trying to say, particularly to Eastern Europeans?
Secretary Austin's message here at NATO was obviously that the United States is going to continue to do what we have to do to bolster the NATO defensive and deterrence capabilities, particularly along the eastern flank. We've added almost 20,000 now, more U.S. troops to Europe than before the invasion. And so we're going to Slovakia next this afternoon, and then Bulgaria the next day, to very, very important NATO allies on the eastern flank. We're going to reinforce that message. We're going to make sure they know that we're willing to continue to talk to them about their deterrence and defense needs, and if there's other ways that the United States can help.
And do the Russians get that? Because we saw on Saturday that there was an explosion that happened very close to Poland. Poland is surrounded by Belarus and Ukraine. Yeah. In your mind, do Russians get that message? Do not play any games on NATO grounds.
We have been very clear with Mr. Putin and with the Russians, both in private conversations and certainly with our public messaging, that the United States will defend every inch of NATO territory. We take our Article 5 commitments to this alliance extremely seriously. That's why Secretary Austin has been here for 2 days, and that's why we're making these 2 other stops on NATO's eastern flank.
And, sir, just as a final question, when you speak to officials from Lithuania, Latvia, Estonia, Poland, they do worry, however, that the war could escalate into their territory.
Sure.
Do you fear a spillover from this war, which is horrific? I mean, we've seen the pictures.
Nobody wants to see this war escalate beyond where it is, and it's already escalated to a degree. You can can look and see what's happening in Ukraine. Again, the death and destruction that the Russians are causing, nobody wants to see it escalate beyond that. That's in nobody's interest. And that's why, again, our message to NATO has been very strong, very clear, very concise. We're going to make sure that we can defend NATO territory.
Well, sir, thank you so much. We appreciate your time and, of course, safe travels across Europe. I know you
so
continue
much.
your trip. Thank you so much.
Thank you.
And of course, that was John Kirby speaking to us. Of course, NATO Day 2 continues. And you heard that number. We're increasing our troops on the ground in Eastern Europe, very much reflecting the language from the Secretary General Stoltenberg, saying we are going to see more troops, particularly in the Baltics, but also for longer periods of time.
Okay, Maria, thank you very much. And important, Maria talking there about troops in NATO countries. Bloomberg's Maria Tadeo on the ground there at NATO headquarters. Interesting, Matt, to think about the global response to what the US has offered here. Interesting to keep track on what the Chinese think, because they're walking a complex line, as we know. And China saying that NATO has escalated the Ukraine situation with weapons.
Yeah, I think that's a really important, a really key part of this problem. China has, in a sense, joined with Russia, well, clearly in terms of the friendship commitment that they've made. A couple of times they've said they oppose war and that they support Europe. But here it looks like they've gone fully in the direction of Russian support against the U.S.
Right, we'll stick with this theme, of course. Later today, we'll speak with the former U.S. Defense Secretary Leon Panetta. That's at 12:30 p.m. in New York, 4:30 p.m. London time. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. In China, the latest COVID outbreak appears to be easing. Authorities reported the lowest number of cases so far this week. And in the epicenter of the latest outbreak, Jilin, infections have dropped from recent highs since the province was locked down on Monday. More chaos in the London nickel market. Brokers trying to sell at the 8% daily limit had their orders canceled. That prompted the London Metal Exchange to delay the opening of electronic trading. It's a further setback to the LME's attempts to restore order following a week-long suspension. The House is preparing to revoke Russia's free trade status with the U.S. That would enable the U.S. to impose higher tariffs on Russian goods. If it becomes law, Russia would be put in the same category as countries such as North Korea and Cuba. Meanwhile, Russia says it has made a $117 million interest payment due on $2 bonds. The money was sent to Citibank in London, Moscow's Eurobond payment agent. Russia had until the end of business Wednesday to honor the coupons on the two notes, but there was concern it might default because a large chunk of the country's foreign reserves have been frozen. So, Anna, I don't think it is fully clear what yet has happened with those dollar bond payments, but at least we're getting some details now out of Russia.
Yeah, absolutely. And the impact, if we didn't see payment there, what kind of read across into other assets that would have? Some people say a lot, substantial. Others say nothing at all. So we'll continue to watch that story. Ron Temple, co-head of multi-asset and head of U.S. equity at Lazard, joins us next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Fed is ramping up an inflation fight in an economy that Chair Jerome Powell believes is tough enough to cope. Policymakers raised interest rates a quarter point, and Powell signaled there will be 6 more increases this year. The Bank of England is almost certain to reach another milestone today. It's expected to take interest rates back to their pre-COVID level. Policymakers are likely to increase their benchmark a quarter point to 0.75%. The expanded arsenal that the U.S. is sending to Ukraine includes 100 armed drones. Bloomberg's learned that the drones are tube-launched from the ground and plunge into their targets. Meanwhile, Vladimir Putin warned that he will cleanse Russia, in his words, of what he called scum and traitors who work secretly for the U.S. and its allies. Good morning, everybody. Also happening this hour, the ECB President Christine Lagarde is speaking at the ECB and its Watchers Conference over in Frankfurt. We are monitoring this, of course. Christine Lagarde saying that the Russian invasion has cast a shadow over Europe. And of course, war on the European continent very much on her mind as she delivers this speech. You can continue to keep up to date with what she is saying, and we'll bring you any headlines. Live Go is the function to use on your terminal. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And Matt, a little bit difficult to find direction in the European trading day this morning and in US futures.
Yeah, it's a little bit more difficult to tell the market story with such small and maybe slightly nuanced moves. So we're not seeing a lot of drop in the S&P futures, but they are down 0.1%. Of course, it shouldn't be a huge surprise after back-to-back gains of 2% plus gains, days of 2% plus gains, I should say. The U.S. 10-year yield coming down a little bit, but still a relatively high level, 2.1261, the level there. And NYMEX crude coming up a little bit, but still down about 8 or 9% for the week, 98.79. So you can see that we have a little bit of fluctuation, a little bit of maybe correction in these assets, considering what we've seen over the past couple of trading sessions. The same can be said for Bitcoin right now, down about 1%, but still over 40,000 at 40,881. Kailey, what are you seeing in terms of pre-market movers?
Well, what I'm watching is really tied to that oil story you were just talking about. I'm taking a look at the Energy Select Sector Spider ETF, which is essentially helpful to gauge how the sector as a whole will do come the opening bell. That ETF is coming off of its worst 4 days since last August, and the biggest 4-day decline since last July. But we are seeing a little bit of a rebound in the pre-market session this morning with the rebound in oil. That ETF is up about 1.4%. And as for some of the individual energy names moving to the upside, Occidental Petroleum is one of the outperformers. It's up around 2.5%. You also have the likes of Schlumberger and Exxon, each moving higher to the tune of 1.5%, Anna.
So that's the energy story here in Europe. Then let's check where we are on the European equity trading session. An hour and a half into our trading day, of course, because of that reduced time difference between the US and Europe for this week and next. The stock Europe 600 is up by 0.2%. The pound in focus as we head towards that Bank of England rate decision. Will we see interest rates lifted to that pre-pandemic level? And will it be a hawkish hike that we get from the Bank of England, just as we saw from the Fed, arguably? Or will they be emphasizing all of the uncertainty attached to war in Ukraine? ThyssenKrupp also talking about war in Ukraine, because they're saying that this means for this industrial German business there could be delays in selling off one part of their company. And nickel in focus in London, certainly because of the closure that we saw in the LME nickel trade for a week or so. It did try to start yesterday. It did manage to start this morning, but pretty much instantly went limit down 8%, of course. That is the new tolerance that we have for the movement in that nickel price here in London. Matt?
All right, so we'll be watching the nickel. I guess reopening is the right word, but it's not happening that smoothly. We'll continue to watch that. The Fed is in an inflation panic. That's the latest from Guggenheim CIO Scott Minerd. He spoke to Bloomberg after the decision yesterday.
The Fed thinks it can control interest rates, and so somehow it's going to manage its way through. So I think that the Fed has largely abandoned monetary orthodoxy. It's trying to be too cute in how it's managing this.
Joining us now is Ron Temple, co-head of multi-asset and U.S. equity, head of U.S. equities as well at Lazard Asset Management. Ron, great to get some time with you. Let me get your take on the Fed yesterday. Certainly, Jerome Powell is talking a strong game.
Yeah, I think the Fed's walking a real tightrope here. They need to signal their determination that they're going to tame inflation. And so they have to really talk a tough game. But I think a lot of that talk is about buying time, to give the Fed time to see what happens with the economy, because we really don't have experience before with tightening in 3 dimensions. I kind of think of this 3D tightening as higher rates, balance sheet runoff, and a tax on consumers from higher commodity prices. So again, the message from the Fed is we're on top of this. We're not going to let inflation get out of control. But in reality, if they actually do what they talked about doing, if they follow through on 7 hikes this year and 3 to 4 more hikes next year, along with that balance sheet runoff, along with the tax on consumers from commodities, I worry that they're actually at great risk of a policy mistake and tipping the economy into recession.
Okay, good morning to you, Ron. And is that what we're seeing in bond markets? Is that what we're seeing bond markets express, that nervousness around whether we get whether the Fed moves too quickly and essentially takes us into a recession?
Yeah, I thought the reaction yesterday was interesting in that there was a bit of a contrast between the bond market reaction and the equity market. I mean, the equity market selling off after the news made a lot of sense to me because, this should be a signal that discount rates are going to be higher and you should move away from speculative growth, companies where the cash flow is far in the future, and move into companies with cash flow now, more quality. The bond market, I think, is right to be a bit nervous. But when I look at inflation break-evens in the bond market, it seems that part of the bond market is saying, okay, the Fed is serious. We've taken 20 bips out of the break-even on the 5-year notes and about 20 basis points on the 10-year in the last week. But I do think there's room for nervousness here.
How much is it right for the Fed to set out the path with, not certainty, but with quite a bit of certainty, I suppose, attached, given that other central banks around the world might be emphasizing difficulties in predicting growth with war taking place in Europe right now?
Yeah, I think it was interesting watching the press conference how frequently Chair Powell indicated that the Fed is acutely aware of the need to tame inflation, control inflation. So I think there was a signaling to the markets and to Washington. But you're right about this degree of confidence. There is not a lot of visibility. And I do think what the Fed realizes is the economy is decelerating. Even without the Ukraine invasion, the economy would have decelerated this year. Inflation was going to basically cool off. And I do think we still have about 1.5 to 2 million workers who will come back into the labor force in the U.S. in the next 12 to 18 months, which should also take a bit of the edge off of wage inflation. So there are a lot of moving parts here. And if I were at the Fed, I would be highlighting data dependency more than I heard this week.
OK, maybe we get that from the Bank of England. Kailey?
Well, Ron, I'm wondering what the line to draw is between a Fed that may be more aggressive in tamping down inflation into margins and your outlook for earnings from U.S. companies.
No, I think this is going to be very important. I think the environment for companies is going to get tougher. Financial conditions have already started to tighten on the back of the Fed talk in the last number of months. And I think what was very clear from yesterday's messaging is that there's more tightening to come. And so if you think about that, it does mean the cost of financing will go up and access to financing will get tighter. And so I do think, yet again, this is an opportunity for investors in the equity market to really carefully examine each security they're considering owning and understanding what their balance sheet condition looks like, what do their cash flows look like. And this is an environment where we should see increased dispersion in market. It should be a stock picker's market.
Ron, while we're having this conversation, Christine Lagarde is continuing to speak in Frankfurt, talking about the war posing significant risks to growth, the need for the ECB to be gradual and flexible because of risks and ready to revise its plan if needed. With the risk to Europe in mind, how does that position U.S. equities relative to other markets like it?
Well, I do think the U.S. is in a good position in that regard, and that the U.S. economy is less susceptible to what's happening in Ukraine. Again, having energy independence is a huge benefit at this point. The price shock to consumers and corporates in the U.S. is much less severe than what you're seeing in Europe. And so I do think it is a very different position for the U.S., and hence it does make sense for Madame Lagarde to be speaking more about uncertainties in terms of policy and how that might affect what they're going to do at the ECB. I do think as well, though, for U.S. equities, it does position those as being a preferred asset over European equities at this point, just given a lack of vulnerability or a more insulated position.
Ron, I want to ask about ESG. I don't really think it's out of left field, although it may sound that way. It's just, I wonder, are these developments, the war and the energy issues that we face, are they a headwind for ESG because we're looking to, drill more for oil and get maybe coal out of the ground that we would have left there previously? Or is it a tailwind in that it pushes us to work harder on renewables and cleaner energy?
I actually think this is a benefit to ESG executed properly. If we look at ESG, in my view, ESG is not about having a restriction list or saying you can't own companies X, Y, and Z. Instead, it's about saying what are the material risk factors and opportunities for each company that relate to ESG, and let's make sure we quantify those and incorporate them into our share price target. And I think for investors, the invasion of Ukraine is a huge wake-up call that we need to reduce our dependency on fossil fuels. The ultimate way to punch at Putin is to reduce fossil fuel use, and we should see the U.S. and Europe respond to that, and frankly, the rest of the world. Climate change is enough of a reason already, but we have yet another reason. You can't have national security without energy security, and I think Putin has made that very clear to Europe.
Yeah, an answer that is increasingly being heard, or a view that is increasingly being expressed across Europe. Ron, thank you very much for your time. Ron Temple of Lazard Asset Management, thank you very much for joining us. Just a quick recap of the lines we're hearing from Christine Lagarde, ECB president, saying the ECB is mindful of risks and ready to revise the plan if needed. Inflation is increasingly likely to stabilize, she says, at 2%. The war poses significant risks to growth, so they're emphasizing the risks to growth, but also talking about the war setting in motion new inflationary trends. So interesting to compare and contrast the emphasis on growth there versus inflation elsewhere, perhaps rightly so. You can continue to watch Christine Lagarde's remarks live go. That is the function to use on your terminal. Coming up, we'll get back to the war in Ukraine. Leslie Vinjamuri, Chatham House head of US and the Americas program, joins us on the latest. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, OECD Director and Chief Economist Laurent Spoon. That's at 7:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg.
They're using their superior knowledge of the terrain and their own geography, as well as their nimble behavior in terms of using these systems they're getting quite effectively. And they have essentially stalled the Russian advance.
Pentagon spokesman John Kirby speaking about Ukrainian forces earlier this hour with our Maria Tadeo. He said Ukrainian forces are using weapons received from allies in an effective way and that Russia is not acting like it wants to settle. Joining us now is Leslie Vinjamuri, director of the U.S. and Americas program at Chatham House, to discuss this further. So, Leslie, when it comes to those weapons, obviously the president of the U.S. announcing yesterday that more are coming, including armed drones. What is not coming is fighter jets. Why is that conversation so much more difficult? Do you anticipate the U.S. will make that move?
Well, I think that they're weighing it up step by step. You know, there's a lot of intelligence. They're looking very carefully at a couple of things. One, we know, is that fear and that determination not to escalate into a position that the U.S. doesn't want to be in. And quite frankly, none of us should want the world to be in. But a second, and I think this is a really important point, is, you know, what will be most effective in terms of helping Ukraine and Ukrainians stand their ground and resist and fight against the Russians. And I think right now there's a determination that there are other mechanisms, there are other weapons that can be used to do that effectively, that there's not as much coming from the sky as from Russia as maybe was anticipated. And there's even a sense that maybe Zelensky is at the moment backing off a little bit and calling for those fighter jets. So I think there are all sorts of calculations, but it's being assessed on a daily basis, on an hour-by-hour basis. And President Biden has been very careful not to let domestic public opinion or congressional public opinion make these choices for him. He's relying on his intelligence, on his military experts, and on a very clear understanding of the context.
Yes, and Leslie, what will his military sources be telling him about the Russian reaction function to NATO or the United States supplying further weaponry of a different class to Ukraine? Is there a firm understanding? Do you think the US thinks it has a very good understanding of what Russia will deem to be NATO in the conflict or NATO outside of the conflict?
Well, I think, yes. I mean, there are some really intelligent people at the top. We know Colin Kahl is very schooled in these things. Number 3 at the Pentagon. They have been gaming these things out long before this conflict. What we've seen is that those who are at the top echelons of decision-making in the U.S. were more conservative when they were deputies, when these sorts of war games were played. So I think we have a very sophisticated set of decision makers who are, you can never know exactly how Putin will respond. There's a real, question mark as to how rational he is, how far he's willing to go, and how that changes for him as time goes by. Clearly, the fact that he's willing to attack civilians, we've seen what's happening in Mariupol, raises grave considerations. But that sort of question of what effects the weapons will have and whether it will lead to some sort of reaction that unwittingly or unintentionally brings NATO into the equation, that is something that is clearly to be avoided.
You know, there's a couple of headlines Anna and I were talking about earlier, Leslie. China saying that they feel the U.S. is escalating the situation in Ukraine. And I thought it was just very interesting that they seem to throw their whole bag in with Russia again. They're saying culprits that worsen the Ukrainian situation should reflect. And I think in this situation, they're calling the U.S. culprits. They're also saying that they want the situation to end as soon as possible. But what is China doing here, and how important are they as kind of the third player?
I think China is extremely important. We know it's important on sanctions. It's diminishing the effectiveness of those international sanctions for sure. There is a real question as to whether China will get engaged as a mediator. China might be making a calculation that it can have as much influence on the U.S. as in Russia. It's entirely possible that Putin is impervious, or that China can't have the impact that it would like to have. Certainly, China has no interest in seeing these kinds of war crimes committed. It doesn't, has never been for violations of sovereignty, but it is standing firm with Russia as it has. And perhaps there's a perception that it can have more impact by shaming or naming and shaming the U.S. in its actions. But I just don't think it's going to work. That Western unity is so strong. But certainly the Chinese probably see the fact that the U.S. is sending that lethal aid, all those weapons, as being a violation of some sort of an intervention in effect.
Let me ask you just one final question on the financial situation. I know you focus on the U.S. and America's program at the Chatham House, obviously, though we're all watching, what motivates Vladimir Putin, or what, cuts him off. And we've been following along to see if Russia will default on their international bond payments. Just about an hour ago, the finance ministry in Moscow said that they have made an interest payment, but it doesn't look likely that they'll continue to be able to participate in the international finance, with the exception of, using China as a partner. How much does that, put Vladimir Putin in a corner? Is it dangerous?
It's certainly going to present significant costs for all of us. The international economy is going to be impacted. We know what's happening with wheat prices. We understand the energy situation. We have some sense of where that could go. And be assured that U.S. decision makers are also aware of this and calculating what they're going to say publicly about when it might make sense to consider lifting some sanctions is going to be very different than what they're saying privately. But those calculations are certainly being made. And yes, the cost is going to be very, very high.
Okay, Leslie, thanks so much for joining us. Leslie Vinjamuri, Director of the US and America's Program at Chatham House. Thanks for your time. Coming up on this program, we'll stick with the sanctions story, but from a different angle. One of Russia's original oligarchs weighs in on sanctions. More from our Big Take story next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. Now, is sanctioning Russian oligarchs going to have an impact on President Putin's behavior in Ukraine? Mikhail Fridman, one of Russia's original oligarchs, argues that punishing billionaires like him shows a troubling misunderstanding of power in Russia. That's the subject of today's Big Take story. Joining us now is the author of that story, Bloomberg senior investigations writer Stephanie Baker. Stephanie, good to speak to you. So, where do you think it takes us when we hear somebody like Friedman then pushing back on his ability to actually influence Kremlin policy, influence Vladimir Putin's policy?
Well, look, the sanctions have been the one tool left in the toolbox of the West to respond to Russia's invasion of Ukraine. And I think the most high profile of those have been the sanctions of the oligarchs, including the seizure of yachts and jets, and that all looks really great. But when you look at how the sanctions are affecting Putin's behavior, I would say probably the most punishing ones have been the central bank reserve freezes, the SWIFT restrictions, kicking Russian banks out of the global financial messaging system, limits on Russian oil. And I think we've tried to sanction oligarchs in the past, and there's been a kind of limited success rate. So as part of a package of sanctions that's comprehensive, sanctioning the oligarchs and their assets in Russia and outside, looks reasonable and like it would be part of a coherent strategy. But what you've seen so far is that some of their assets in Russia haven't really been hit hard, but their assets in the West have. And that was one of the arguments that Friedman made to me. I didn't understand why Alpha Bank, for instance, had light touch restrictions while his assets in the West were totally frozen.
Stephanie, unfortunately, we don't have any more time, but I loved your piece, and I recommend to all of our viewers and listeners that they check it out. You can do that on NI Big Take on the Bloomberg terminal. You can also go to Bloomberg.com to read Stephanie's piece on her I guess Tea with Friedman would be a good name for that as well. Take a look at what's going on in the markets right now. It looks like futures are moving further to the downside, now off 0.2% as investors catch wind of a little bit of curve inversion. The 5s and the 7s are now trading above the 2s in terms of the yield. The 3s are right there, just under 212. And the 2s are just 18 basis points away. So keep your eye on the curve because an inverted yield curve is not something that the markets like too much. Surveillance is up next. This is Bloomberg.